Coming up, before we get into today's episode, we want to tell you about an event we're really excited to attend, and you might want to consider attending as well. InsurTech Connect London 2026, taking place on the 26th and 27th January at the brewery in London.
It's an invite-only senior level conference focused on the London and UK insurance market, where leaders from insurance, brokers, MGAs, insurtechs, and investors come together.
The format's pretty interactive for a conference. Expect roundtables, workshops, fireside chats, networking drinks, an innovation zone, and more. And I can only say from my personal experience, ITC strikes, for me at least, the perfect balance between high quality content and networking with people you always wanted to meet or you haven't seen in a while or you just enjoy hanging out with.
Just second that, I feel that ITC is the premier insurance conference. I've always been a big fan and attender for years to come. Combine that with London, which has its own insurance history, some might say, I think it's a real winner. So if you're shaping strategy, leading innovation, or building the future of insurance, this event is really made for you. The guys at ITC tell us spots are limited. They do have some early bird offers still going, depending on when you listen to this. So check it out.
Go to london.insurtechconnect.com. Don't forget the E in the middle of InsurTech to apply to attend. Check the agenda and see if you qualify.
We hope to see you there. Now let's go into the episode. Hi everyone, welcome back to another episode of Reinventing Finance. As usual, I'm here with my lovely co-host, Ron. Ron, how are you today?
Hi, very fine.
And as usual as well, we're not all by ourselves, but we managed to get Aljoscha with us today. Aljoscha, it's a pleasure to have you on the podcast. How are you?
I'm great. Great to see you both.
Great. Aljoscha, you are the managing director of insurance at Verivox, a leading German price comparison website. Would you kindly introduce yourself and Verivox to our listeners, viewers?
Yes, sure. So my name is Aljoscha Ziller. I'm the managing director at Verivox for the insurance business unit. And my journey in insurance started pretty much 10 years ago when I was a master's student at ESSEC Business School in Paris. And as many people back then at university, I was looking for an internship, and I found a very interesting internship at AXA in Paris, where I started as an intern in their strategy team. And now, today, pretty much 10 years later, I'm now the managing director. So from 10 years, from intern to managing director, and all of this time in insurance, it was quite an adventure, I can say, because the industry has changed a lot. And it's still very exciting to be in this industry. Maybe to break it down briefly, most of this time I spent in consulting, where I worked at the managing consulting firm Horvath, focusing on the topics of strategy, innovation, and sales in the insurance industry. And about 3 years ago, I joined Verivox because I loved the time in consulting, but I just got tired of living out of my suitcase. So this goal I managed to keep today, where I still travel quite a lot, but not as much as in consulting. But at the same time, I was looking for a role where I can build something, and this is certainly the case here at Verivox. And the last 3 years have been quite exciting for us, and I'm happy to talk about this phase also in the interview today. Maybe a few words about Verivox. As you already mentioned, we are a leading German comparison platform. We generally have 4 business units: energy, telco, banking, and insurance. And our goal is to make complex markets transparent in order to help our customers to make smarter decisions by saving time and money.
Sounds very, very interesting. Also, from my side, very, very warm welcome. I think our paths crossed first time just when you started. So we're also very, very interested to find out what happened in between. But let's dive right in. In Germany, when you think of price comparison websites, probably seven, well, 9 out of 10 would think of Check24 first. They're quite dominant especially in the insurance space. Verifox is the number two, but with a smaller market share. So, what's your positioning strategy? How do you differentiate towards customers on the one hand side and insurers as well?
I'm happy to go into that point. Before I do this, I just want to give some credit to our competitor because we have, of course, a very good idea of how we want to differentiate ourselves, and we believe that there is a right to play for us as Verivox in the market. At the same time, I just want to say the growth that Check24 has managed to demonstrate in the market, especially in the insurance business over the last years, is something that I have to give, or we have to give some credit to. And certainly, this is a growth case for Check24. But again, I believe that we have plenty of things in our hands to be a very strong second player and to catch up. And to just correct you slightly, I think it depends on the industry you're looking at. You're right that in the insurance vertical, we are still smaller, but you have to take into consideration that Verivox is a player that started in the energy business and is a leading player and a household brand in energy. And we have the goal to build a strong pillar next to energy. Just to give you a bit of an understanding, since we have been in the market, we have served 8 million customers in Germany as Verivox. So this demonstrates that we are a household brand. And I think this is something where we as the insurance team can leverage on. But at the same time, what we have to manage is that people also associate insurance expertise with Verivox and not only the great energy expertise that we already have.
Understood. And you personally, you have a background in bank assurance as well, right? So what what are the areas you want to double down within insurance? How do you want to position yourself in the future? Or are there any areas you want to avoid where you think you can't be check at the check game? You have to do something a little bit differently.
Yeah. So I think I want to start by saying we have a different approach than Check24 does. If you look at the way Check24 is approaching the market with all of its business units, they have the clear goal to basically offer any potential products that they can bring to the market. If you look at the past, they started launching online products for sales, very traditional like Amazon. They started with travel, and they started even with selling old tires. So this was a business approach that tried to go quickly into different markets. We as at Verivox, we have a different focus. We focus more on these key verticals that I just mentioned. And the way that, or the idea that combines them all is the idea of the household. How can we improve the financial situation of a household? And this includes the four pillars that I just mentioned earlier: energy, telco, banking, and insurance. And I think what I also want to stress out is that the way we do business is also different to Check24. This, for instance, relates to the way how we interact with insurers.
How would that look like? Is that more of an advisory role? Is that going into an ecosystem? We are your household
Mm.
partner and advise you on everything that happens in a household that comprises energy and insurance, probably also internet, maybe
Mhm.
finance, things like this?
So first of all, I think it means that we both have to understand the insurer and to understand the customer. And then we want to build a triple win scenario where the customer, Verivox, and the insurers win. So first of all, I think that's important to understand that we need to take each of these perspectives into consideration. And then it's just a different way of doing business with the insurers. It's a way of not only looking, for instance, at financial numbers, how many orders do we submit? It's also looking at the information with regards to claims. It's also looking at the holding period of these contracts. It's basically a holistic customer view that we try to push with these insurers and come together to have a strategy for the coming years, how we can leverage these customers. That's the insurer side. So on the customer side, I think we focus or we differentiate ourselves through focus, credibility, and customer orientation. What do I mean by this? When we iterate our journeys, when we talk about our digital products, we take into consideration very strongly user research, what the clients tell us in our interviews. We also take into consideration the findings from continuous A/B tests that we have on our platform. And taking this both into consideration helps us to build a tool that is attractive for the client in the end.
Out of if when you said that you don't want to wedge yourselves in between the insurer and the client, I think is being an intermediary. How does that work? But isn't that your role by definition? Or what would be some practices that you see? Doesn't have to be Check24. There's lots of price comparison websites out there. What are some practices that you would say, no, this is something that we're not doing because we are trying to balance these interests? Because I still don't quite have the view how you're not the intermediary, and you probably want to be the intermediary.
Of course, you're right. We are positioned at the customer interface as Verivox, as any comparison portal. But what I mean by what I said earlier is that if you take, for instance, into consideration some moves by competitors that tell insurance companies, hey, if you want to engage with these clients, you need to engage with them through our contact center. This is not something that we want to do, where we tell the insurer how they have to interact with their clients. That's an example one. Example two, we won't start our own brands that will be in the comparison, that will then directly compete with these insurers. Again, something that our competitor has done on multiple occasions. The most famous one where they created their own bank, and put it on the sweet spot in the comparison. Again, this is not something that we believe is essential to our strategy. Our strategy is to offer insurers a path for growth together with Verivox, and not to come up with ideas of how we can replace the insurer in the customer interface with the client.
No replace, but do you see partnership models? Do you see even embedded distribution models becoming more relevant for you?
So I want to go a bit into detail here, because I think embedded insurance is certainly a trend that is impacting the industry, and it is also something that we as Verivox see. So I want to look at it from two sides. First of all, I think an embedded insurance often works better in a way where you have a single product that you can offer as an add-on. We as a broker have a more challenge task. We want to give a comparison of an overall market. And this being said, this is something that is much easier when you have a product that you put on top. You go to a car dealer and you say, hey, you just tick here and you have the insurance on top. If you have to go to a marketplace that compares a lot of potential insurance, it takes away this initial add-on easy possibility. This being said, it doesn't mean that we can't engage in deeper partnerships with these insurers. And this is something that we do because we drive transparency, we offer efficient distribution channel, and we talk with the insurers, like I said earlier, how they can position themselves in a good way to grow in the market. And I think this is something, again, coming back to the triple win scenario that helps all players, because I just want to make one point that I feel very strongly about. I think there is really a need for a strong second player in the German market because a monopoly will hurt insurance companies in the long term as they get too dependent and they will, from Czech, having to pay more and more commissions. But it will also be for the customers because a larger competition means that they have choice, means that they have different ways of products, how they're being presented. And in the end, they can choose the provider that they feel is most trustworthy. And I think that we are on a good path establishing exactly that.
If I'd like to move the conversation a little bit into the, let's say, commercial mechanics. If if you're talking to insurers, and quite frankly, you're usually not talking to the person who is only in charge of direct sales, to be honest. It's normally someone who owns a larger P&L. And there seems to be a statement, at least unofficially, that you can't really run a profitable book online. And it's at the function of, customer acquisition. It's not just the customer acquisition costs. It is also that you have a predisposition of illoyal customers when compared to, your very loyal tied agent customer who never, reviews their policy for 20 years. And you also have a higher propensity to claim simply because you're kind of fishing for, let's say, more informed, active insurance customers. Just what do you say to that?
I say to that I disagree with this statement to be fair.
I had a feeling that you
Yeah,
might. Yeah, I had a
that's
feeling.
so. But let me give you a bit more of a perspective. First of all, I mean, I'm going to go into the topic of profitability. But first of all, the question insurers have to ask themselves is this: do they want to miss out the fastest growing distribution channel in the market? Yeah, this is something. If you look at direct sales, if you look at the GDV, GDV data that is published every year, no other distribution channel is growing faster than the online channel. That's my first statement. And the second statement I want to make is, do insurers feel confident that they can do online marketing in the same professionalism as we are doing it? Because this is what we offer to the insurers. We offer them to acquire customers in a digital field where they are otherwise struggling to compete when it comes to search engine advertising, for instance, or social media. So this is where we put in our strength. Now, coming back to your original question, the task that we as a comparison portal have is to transfer this discussion that generally a client has with a broker or an agent to the digital field. And again, this is not something that is easy, but it's something that can be done. And this includes, for instance, not only talking about price, but also talking about the how well your insurance is positioned, what will be in case you have a claim, and in the end, narrowing down these clients. What I can tell you is that there are different insurers on the market when it comes to working together with online comparison portals. We are now in many products mainstream. When we were in the early years, it might still have been the case that there was only a particular group of clients that took out insurance online. If you look at car insurance and online comparison portals today, we are mainstream. So the client base is very similar to the offline base. In other products where we are still growing further, it might not still be the case yet, but in the end, this is the job of the underwriter, to take into consideration potential different risks, taking into consideration potential different customer approaches and journeys. And in the end, what we see is that many insurers have managed exactly that. whereas others are still struggling a bit to deal with different customer profiles in different acquisition channels. So this being said, the clients are becoming more and more than the overall clients. This we see when insurers tell us that generally we have good holding periods. And the other part is if there are still some differences, this is something that can be mitigated by efficient underwriting.
Just kind of adding to that. So if you are kind of talking to, and this is largely informed by, I would say, conversations from not price comparison websites, but I would say other types of intermediaries who try to win customers in the online space. And to me, the following levers seem to have emerged in order to kind of run this profitably. On top of what you said, search engine marketing, SEO, etc. And some things that were mentioned is number one, P&C is obviously a lot harder than life and health simply because of the commission structure, right? So if we go into P&C, it is almost you have to pre-finance that customer for like years and years and years because insurance is a get rich slow scheme. And this is also actually, I think this is something that we've also previously discussed is, if everything's humming nicely, everyone prefers the high upfront commissions because it just keeps the wheels turning. It's very easy to continue spending. But once that, let's say, wheel starts slowing a little bit, all of a sudden people really like having the recurring commissions of past successes supporting it. So it's almost like a market cycle view, right? If the transactions are hot, everyone wants the transactional cut. If they're not so hot, people really like that cushion of commissions. And the other two things that they've said, and just wanted is like it's really like telephone really matters, right? It's not just online. It's really finding the right way to engage with the customer, which then also allows cross-selling, which incidentally is much easier it's like on the first product rather than afterwards finding another good entry point to offer a second policy, which is also mirrored by a lot of brokers and tied agents who actually find it really hard to cross sell after the initial conversation. How how much of that do you think would you support? How much of that is applicable or requires more nuance when you apply it to the Verivox case?
So Nick, I disagreed with you in your earlier statement. I'm agreeing with you in this one. So at least partially, but of course I need I want to put in a few nuances. So first of all, if you look at the online business and acquiring clients there, it is true. If you look at paid channels, you generally in P&C have the situation where the customer acquisition costs are higher than the first year premium or the first year commission that we earn as a broker. So this is a general issue that you see in search engine advertising in the industry. And again, it's something where my point comes of saying, this is a question where insurers have to ask themselves how aggressively they want to go into these paid channels, or if they want to, rely on a player like us that is willing to do this and to finance this type of business. So how can we, before I go to the next point, I just want to say at the same time, year after year, hour after year after year, our portfolio in P&C growth. So this gives us a stability. If we get hit by an economic crisis, our portfolio remains strong. So this is exactly what you said. It hurts when you have to invest in this business, but in the following years, it helps you to have this stability in your portfolio. Still, I want to go to the point, how can we optimize these acquisition costs? And I think there are two points to my answer. The first one is, I think in the end, it comes down to the mix. We as a comparison portal have exactly what you mentioned. We have this very stable P&C business, but also revenue driving health and life business that finances up on a very short-term base, if we make a private health insurance or a disability sale, we have an initial cash flow. And basically what happens is that these cash flows finance the growth also in P&C. It's a balance we as a comparison portal have to take, and this is a balance that every insurer has to take into account. So this is the first part of my answer. The second part is, again, something that comes down to mix. You have to balance your acquisition channels. Yeah, if you only do paid, you have to accept a certain holding period or that until you become profitable. But if you manage to leverage your existing clients, if you do cross-selling efficiently, and by saying cross-selling, I mean this can be automated cross-selling through mailing campaigns, but it can also be personalized cross-selling through agents. This helps you to not only be dependent on non-organic channels where you have to incur these high acquisition costs.
I would like to shift a little bit. I was prepared to talk all day basically on customer acquisition costs on the different revenue stream. But what struck me was you mentioned claims already twice. So let's move maybe a little bit to retention, to customer retention. Do you integrate claim signals or NPS into your rankings? Do you have some indicators for maybe poor policy fit? This also goes into the direction of what we discussed before, you being the advisor of the households holistically. Can you elaborate a little bit on this, please?
Sure. So let me start by saying that claims is something that we don't actively manage or steer at Verivox. This is something that the claims department of the insurer does. But in the end, the number of claims and the amount that is being paid, of course, affects the portfolio that we give to these insurers. And that this for sure is an issue, because in the end, we don't want an insurer to leave our platform. Yeah, we don't want an insurer that after a few years says, hey, I've now had a lot of Verivox clients, I don't want to be on this platform anymore. This, by definition, gives us a reason to have an eye on the claims and to have an eye on the portfolio of the insurer. And how we do this is we look at the performance of the claims together with these insurance companies. And also, we try to understand what is driving these claims and how we can adjust our journeys in order for clients to have a bit of understanding in a similar way as the offline broker would do. For instance, we tell a client, so if you choose the deductible or excess, we simulate for the client what this means for his premium. And this means that then higher deductible means that lower premium for the client, but it also means probably lower claims when a client thinks about handing it in. It can also mean if a client calls us, we don't actively steer claims, but we take them when a client talks with us. We asked him, hey, do you really want to hand in the phone that you broke in your private liability insurance? Is this really something where you want to put your insurance in danger and your contract being canceled? So we try to steer this through these ways that I just mentioned. Another option is that when we take into consideration weather data and we know that there is a big storm coming up, we inform clients about the possibility that the storm is coming up and make sure that their cars are safe. So just a few examples of how we, together with insurers, try to also influence claims.
If you take this one step further and you say, well, there is certainly an influence also of the claims experience on next year switching, especially in P&C. And so this for me, you talked a lot about what you do for the insurer, and with the insurer, you don't want the insurer to leave. However, for one, it might be good if a customer switches insurance, because that means, of course, new commission on the one hand side. But if we go back to the insurer, if you drastically improve the claims experience and keep this customer from switching, that opens up actually the door for partnerships. I'm thinking about claims concierge, post-bind service. You already say you're taking in certain phones or whatever. Is that something we see in the industry? Is this something you think about? Partnerships for claims support, post-bind service, whatever you want to call it, any services in this?
I mean, there's certainly a move in the industry where I can see many of these developments. But what I can say is that we at Verivox have this strong idea of focus. You know, we are the smaller player. We want to catch up and we have to do our homework. So the question is, where do we start? And by opening up new topics, new tasks, it means we shift away from this focus. And the focus is have good performing customer journeys, build strong relationships with insurers that we can scale, and have a good digital offering that is trustworthy for the clients.
And this has also not changed because you just said you're the smaller player and so on, but behind the scenes, after ProSieben sold a stake to the Italians to multiply, now at least from the outside, right? We have no clue, but all of us have an opinion. It looks like now you have money, more money, and also the time is ripe for the next big move. What has changed, or will you continue to focus as before, and actually there's no big change to be expected?
Yeah, so I'm happy to go into this point as well. First, let me say that in the 3 years that I have been here at Verivox, we have managed to put the company back on growth. Yeah, and so this was already the case before Multiply bought us, also together with Verivox and ProSieben. In the last years, we have grown quite strongly. And I think for the past, ProSieben was the right partner for us because it managed or it helped us to build a strong brand as Verivox, being able to have a strong presence on TV. And I think that Multiply or its Maverick division is the right partner for the next steps. Why is this the case? If you look at Multiply, they are experts when it comes to online comparison portals. They own the leading online comparison portals in key European markets. And if you look at these markets, you see one common trend. The business unit that is driving the strongest revenue part is insurance. This is in fact not only the case for Multiply, but to all European key markets. So this shows that the focus on insurance maybe has shifted to some extent. We have now an investor that is very keen for insurance, that is very strong in insurance in other markets. And for us as a business unit and for me as a managing director, of course, this is very exciting because we now have an insurance expert partner on our side that helps us to push forward. And just to give you an example, if you look at the Italian market, when Multiply started there, they were also quite a smaller player, but over the years, they managed to grow their business in the market, getting closer and closer and closer to the main competitor, Facile, where there's now a situation in the Italian market with a head-to-head race. So this gives us hope for the future in Germany, where again we have a strong player with Check24, but I think we have to fight them on smart moves, and I think that's exactly what we're doing.
Can you share any type of knowledge sharing, best practices, and if not the exact best practice itself, but which areas where you feel this is actually where best practices are transferable and we can use the Italian market if you feel that that is a comparable market, or where it's actually also dangerous to say. So I've known quite a few players who thought we've cracked the UK market. This is how it's done in the UK. And then all of a sudden realizing, well, it's not really how it's done on the continent. So there's also danger there, right? Can you share your view on which things you feel are comparable in terms of best or portable in terms of best practices and which might not be?
Funny story at the beginning, but again, obviously the distribution in these markets is very different. Generally, the other European market have a much stronger car focus. If you look at the German market, it's a much broader product focus when it comes to the products that are being sold online. So that's a big difference. But at the same time, there are many things that we can learn. And this, for instance, comes a lot from the marketing, from the online marketing expertise. You know, how do we approach the topic of search engine advertising? You know, what are some models that we integrate here in order to predict better how our potential leads and clients behave? This could be, how can we build a successful CRM machine? This is, how do we leverage the customer data that we have? So a lot of things that we can learn across these borders and also from the other leading insurance comparison portals in Europe. What I can tell you, what we won't do is we won't have, this is not a case where we are trying to leverage, let's say, personnel across borders or FTE headcount. Our finance team won't be sitting in Milano in the future. We will still remain as an independent Verivox company, and we will leverage these learnings and expertise from Maverick that will help us to continue our growth story.
But as we see, something I wouldn't call it a roll-up model, but multiply acquiring aggregators, acquiring price comparison websites, buying the stake in you. What does that mean for the aggregator model as such? What are we gonna expect over the next 5 years? Will there be a consolidation, integration? Will they all stay themselves?
So I think there's still plenty of competition and ownership models in the European market. There are strong PE players that own Comparison Portal. Now we are part of a strategic move by Multiply. So I think that consolidation is just something that is natural in the market. And I think if you look at the key European markets, what you see is that are generally one or generally two, at least two, three key players. And I believe that this will be the scenario going forward. Beyond these two or three players, I think it will be very difficult to be competitive in these markets. That's why also I think it's difficult for new players to move into these markets in order to build a brand, to build a customer base. And this means that smaller players could potentially be acquired, but I still believe that the competition will remain fierce within these two or three leading players in the markets.
If we move kind of a little bit into technology, data, customer engagement, I would like to serve you with a few ideas just outside in that seem to be, more or less strategic or tactical with very different, I would say, pedigree of applicability. And I would just like to get your gut sense on, is this a good idea and why, or is this a bad idea and why? And you can be as direct or political as you like, but just kind of to get a sense of some of these things. So how relevant would you say is segmented messaging, right? Tailored propositions and messaging for target, it could be students, it could be families, it could be linguistic, it could be basically anything. And I would say both from just messaging on the targeting side, but also how that would flow into customer journeys and advisory sales. How relevant do you think that is?
Super relevant to make it easy. I think that we call it data-driven personalization increases relevance and trust. because you just have to take or accept that different customer segments like to be addressed in a different way. And this is something that we want to do. And I think this is also where the overall market wants, because they have different preferences. They have different things that are important to them. They are more price driven, or they are more driven by what they get for their money. So I think that's the important part, to adjust this messaging to the right customer groups. And in order to do this, we need data. And I think this is something where we, as a comparison portal, have a strong position, because we can segment this data in a very professional way. We, if you take into consideration the car journey, we have more than 40 different data points that are collected along the journey. So we know something about quite a lot of things about the client, but at the same time, we are very careful in how we use this information, because you can't just call a client and say, hey, how is your dog doing? They would wonder, because they just came to us for a car insurance. So generally, what we want to do is that we only use data that is valuable for the client, where we can improve our messaging or our product in the end to make it more relevant.
Just digging in there, I would imagine that anything we get, outside of your website, where it's about messaging, where it's about campaigns, where it's marketing, customization is just mechanically easier, right? It's easier to spin up a landing page than to adjust your car insurance flow that is connected and agreed upon with, dozens of insurers. Um, if if that were true, how relevant is kind of then that on-site customization? So I would say, driving them to the site and even potentially matching, it's already more difficult, but matching potential like for like advisors, so you don't get a really old advisor to, a young mother or something, that kind of matching seems organizationally also easier than the on-site customization. If we can kind of break these things into these three buckets, would you support that statement, or if not, what type of on-site customization that is flows from the segmenting do you see, or do you already do?
So I think you're right that it's not that easy and intuitive how to do it, but I think that this is something that a customer expects from us. And how we do it is we build modular funnels. Our product is not the same for every client. This could be, for instance, that there's different way to get to the end of a funnel. Some clients prefer to get in touch with an agent at an earlier stage. Some clients prefer to do it completely online. This is something that we integrate. This can be, in the end, the policy that we suggest to the client. Our recommendation is based on the current situation that the clients are in. Let me give you an example. If I want to sell dental insurance, I shouldn't just ask the client, how old are you? Have you had any what major issues in the past? I also ask them about their preferences. What is important to you? So when I give a recommendation, it is based on the preferences of the client, and it's also based on the current situation. If the client has some teeth missing, I can't propose a certain insurer, because I know they will have a higher premium adding up for this kind of scenario. So that's the beauty of building digital funnels. And I think this is the essence of how we have to evolve our business model if we want to remain successful also in the digital world, where we target the right clients and where we give them an attractive offering.
Taking that nugget about evolving, so how relevant do you think are AI-based chatbots to guide people through such a journey that would then, hit your comparison APIs or something, just in terms of the potential of providing customized flows, because we both know there is, yes, we can modularize it, but there's also a limit to the level of modularization, because it's proper plumbing. It's like someone needs to sit there and write down the modules.
So let me start first by saying I think that AI will have a major impact on our business model, and we are, of course, evaluating on several fronts how we can integrate AI also in our processes. This being said, what is important to me is that I think AI, from my perspective, supports, not replaces advice. And I think this is the position we have at Verivox. I think that especially when it comes to critical insurance products, we have our insurance experts in the team, and they will also be there in the future. This is what our clients expect. They want to engage with a person, not with a machine. This being said, what about things, contract management that can be done by a client by itself in a online portal? This is something that can be done automated. What about AI supportive functions for our sales agents, where they get some suggestions for improvement, where they help them to write a protocol after a meeting, where they help them to structure data. This is all something where we see a lot of potential. But again, when it comes to the interface with the client, I think this is something where we are very cautious, because this trust that I mentioned earlier, that is at the center also of our strategy, this trust is often still related to the customer experience, but also often just to the pure fact that they were helped by someone from the Verivox team. And it will still take quite some time until AI is at this level of satisfaction. And until then, we use it as a support and not as a replacement.
Understood. Behavioral triggers, using things like scarcity, bandwagon effects, and there's a whole range of things in there. Have you found those relevant? Which have you tried? Which are not relevant?
So let me answer this by saying, first of all, I think, marketing is a lot about psychology. So it is important to think about how a client reacts to a potential message. This being said, I think behavioral triggers can help to boost conversion, but they must stay authentic. Yeah, so
Mhm.
this is, otherwise they will harm the factor of trust, what I just mentioned. So this being, of course, we could have a situation where we have a limited amount of policies that we sell with a dedicated cashback. But when we do this, there is, in fact, this limitation. It's not something that we do on a superficial level. We generally think about how we can, do these actions and behavioral triggers in order to make our product more attractive and see if it is relevant for the clients at this particular stage. One thing you mentioned, clients care what other people, what their peers chose as a general insurer. So this is something that we could outlay for them, where we tell them, okay, clients in your segment, in your age group, generally prefer these type of insurers, and this could be something that could influence our suggestion. But this is something that we believe is in the interest of the client itself.
Mhm. If we're kind of going into policy comparison, and I know that at its core you do policy comparison, but if I'm not mistaken, one thing that I haven't seen in the market is comparing it against my existing policy prior to it being switched through you. So what if I start the journey? So I get, you know what I'm getting at, right?
Yeah.
It's um, so not what is best in the market. How does it compare to where I'm at right now? Because that is still something that creates some cognitive not dissonance, but it's work. You know?
I understand what you're saying, and I think this is, is especially applicable to more complex products. If let's start with a simple product, I think in car insurance, the need is not that high. It's really a commodity. It comes in the end on certain brackets that you want, and you can still use the funnel without having to analyze in detail your old car insurance because it's very much standardized. In other products, this might not be the case. I have a home owner contract from 10 years ago. How does this position
For example.
itself with the tariffs that we have in our system today? And this is, of course, something we're looking into. And let me just tell you, if you check our platform in a few months, try to see what you will find there, because this is, of course, something where we believe we can again offer the client additional value, having the option of comparing our offer with the previous existing offer.
Cool. Abandoned cart measures and basically I would ask kind of two things. So abandoned cart being, you automatically or systematically engage with people who have not finished the
Yeah,
process. The way I would kind of break this out is basically, where do you see to get that client information and potentially consent within the flow? And the other thing, your view and experience about the, let's say, invasiveness of that follow-up, ranging from email, SMS to actually a call back. What your
yeah. So I think that this is something that is that we actively look into as an e-commerce player. Um, First of all, we try to offer the client actively to save their results. So this could be that if they want to come back at a later stage, they don't have to finish the sale at this point. They can continue right off at the point where they left. So this is something that is actively done by the client, and it's not intrusive. The other option, of course, are reminders. This is something that is very common in e-commerce, and this is also something that we do because we believe it helps the client to put the topic back on the agenda. And again, the client can decide to switch off these reminders. The question you asked, where do I collect the information and what benefit versus what damage does it do to me? I think that's a crucial one because the earlier you ask for personal information, the more clients might leave your platform. Whereas the earlier you ask for information, the more potential leads you collect. So the way we solve this is by actively testing things and having user research tests where we engage in these kind of questions with the insurers, with the clients, excuse me. And when we decide to roll out, particularly asking, for instance, for an email address in an earlier stage at the funnel, again, it brings me back to the topic that I mentioned. We explain to the client why we do it. It's a factor of trust. We say, listen, if we do this now because it will allow you to continue at any time at the point where you just left. We make a value proposition why this is relevant to the client. And bear in mind, a lot of clients, there might be some clients that might leave us, but again, they are the clients that maybe didn't want to buy from an online comparison portal in the first place. They just wanted to grab some information in terms of prices. In the end, we have a business model, of course, where we also want to have clients that take out these contracts from us. So this is not a simple task to balance all these interests, but again, I try to explain it. We try to do it in hands with the interest of the clients. If we collect some information, we explain why we do it because it means it will give additional value to these clients. And if it still should be the case that they don't want to be contacted, they can stop this at any time.
What about exit pop-ups?
Yeah, this is also something that is relevant because in the end, if a client has not decided on let's saving their result, an exit pop-up is something that can drive a saved search, for instance. But an exit pop-up could also be something that helps us to make our product better because we can ask the client, hey, why are you leaving our page right now? Just give us a quick answer. Is the
Sure.
price too high? Is it not attractive enough? So again, something we use and something we believe in because it helps us to make our product better, or it helps us to keep the customer involved in the process.
What is your experience, or do you have any experience with automated upselling? And I mean intentionally upselling, basically, whereby I know from a few players who I think is in a car insurance journey. You go through the journey, someone actively did not select, I don't know, roadside assistance.
Mhm.
Now you re-engage with them, yeah, 4 hours later or something. This one was via SMS with a very friendly SMS, and they managed to convert 10% of people who previously decided not to buy this cover to then top that up. And there's basically, it's a modular product. You can kind of see this anywhere. Is this something that you've investigated or rolled out on your platform?
So upselling is part of our journeys in general, and I want to position it in the right way. We don't do upselling because we are the greedy online comparison portal that wants to make more money. We do upselling because it offers additional security to clients in parts where it's relevant. And I'm going to give you a few examples. If you go through a car insurance funnel and you take out your car insurance, we offer the clients to also take out car legal insurance in case
Sure.
they get into some legal fight. This could be one option. Let's take another option. We have homeowner insurance. We have to keep in mind that the clients, they go to the result list, they see an offer. In some way, they're often price driven. And then generally what an offline broker would do, they would tell, hey, listen, this is cheap, but keep in mind, you have these potential things. Are you aware of this? And is this an active choice? So how we do this, let's say a client takes a particular insurance and then they continue the funnel. We tell him, hey, are you really sure that you don't want to take out elementar additional
Mhm.
security, extreme weather conditions that help you, because this is something that in the last years we know has done strong damage, and we give the client the option. This is the price without, and this is the price with
Mhm.
this additional insurance. You choose. In the end, it's a decision that the client can do, and I can give you a few more examples, but in the end, it always comes down to this point. We offer an additional service or offering when it makes sense to the client, and we leave this choice open to the client. We don't
Mhm.
actively bundle in the beginning. This is always a conscious choice that the consumer has to do.
Um, Two more, and then we're through. I ran out of steam. Customer referrals, pretty basic thing. Everyone knows customer referrals. The one thing what I've seen, actually, it's a German example where it really, really worked was not, converting it for Amazon voucher one-off, but to pass on some of the recurring commission to the clients. There's different legal ways of how you can do it as an insurer and intermediary, but it really knocks down to this to say, uh, for every additional client that you take, you'll save, I don't know, 5 to 10%. Depends on the total commissioning of the product on an ongoing basis on your policy or as a kickback. Um, I guess my question is, have you considered a more aggressive, it's almost like a pyramid scheme, right? That's really what it
Mhm.
is. A program to customers. The benefit of it, you do tend to, at least for German customers, that tend to step them over the hurdle rate to do this weird thing where you at which point do you refer within your private group for some form of financial gain? It's like a weird thing. I think we've all known some friends are a little bit too fast and
Mhm.
loose with these things, and some would never do it, and it's difficult, but it also because it almost creates like a renewal incentive because these discounts are only active whilst the policies basically remain with you or with an insurer, depending on how you structure it. So I guess what do you think about a program like that?
mean, I get where you're coming from, and I see some of these approaches in the market. What I can tell you is that our approach is that we want to build customer satisfaction with a good product and great service. So we actively monitor NPS. We look into the clients, we engage with them to share their experience on online portals where Verivox Insurance has a great reputation and standing, and we encourage them to tell their friends and families. What we don't actively do is some sort of scheme where we incentivize this to a degree where in the end it comes, a monetization method of acquiring additional clients through utilizing your own clients becoming the agents for you.
Exactly.
This is
Yep.
a potential, but the way this happens for us is because these clients generally are happy with the experience they have, and
Sure.
we try to obviously engage them and support them in telling this to their friends. But we don't believe, or we believe, let's put it like this, that a program like this also takes away this intrinsic motivation of talking about a good experience. And that's why we have chosen a different path here.
But
Every
they do.
extrinsic motivation counteracts the positive intrinsic motivation that would have done so anyway. That's the
Yeah.
problem. Yes.
I would just ask, do they at least go into your rankings? The role of reviews, the role of recommendations, the role of, let's bring us back to claims
Yeah.
experiences.
So this happens indeed. So we actively ask the clients about their perception of insurers, and this insurer rating is then factored into account or it's made transparent to the other clients. So this is something we generally do. We try to understand how happy were these clients with the experiences at these insurers. And this helps us to put pressure on the insurers to improve their interactions with the clients in case there's an issue, but it also helps other clients to see the experiences that previous clients have made. So again, in this way, we use this kind of customer feedback or as a way to increase transparency on how insurers are engaging with the clients.
Gentlemen, conscious of time, I know we're running, and Aljoscha, Ron, thank you so much
I was
for your time
waiting
and
for your last one. I think we have one open, right?
yeah. I mean, that's fine. I can leave one on the table. Um, but kind getting closer to the finish line and kind of opening this conversation up again a little bit. If if you had to, or if you could reinvent the insurance aggregator model from scratch today, I think you've indicated that it's really difficult to do if you were to enter a market for brand customer access and other reasons. But what would you do differently, if anything?
I think I would build a model around trust, personalization, and lifetime relationships or lifetime view. I think this is something where comparison portals in the past have very much looked on growth and had the idea I have to switch a client often in order to you know increase my potential revenue stream. And I think this is not something that is sustainable, especially when it comes to the relationship with insurers, but also the relationships with clients. I think online comparison portal should be open enough and fair enough to say to a client, hey, you are currently very well insured. There's no need for you to switch insurance. And I think this is something that we as Verivox are also doing, because in the end, this builds trust where a client then, when we tell them at this point you are underinsured, we really encourage you to take into consideration better coverage, they listen. So I think this factor of trust is something that comparison portals in the past, have not taken into the center of their campaigns. let's say, at least some competitors. And I think that this is key in order to establish the online comparison channel as a trustworthy channel where clients have a good feeling that they can use and they can go to, and where they don't think that they will find a suggestion that is influenced by a commission that an online comparison portal is getting. This is not something that we believe in. And that's why we are very transparent when it comes to the rating of the insurers. And this is something where we give a promise that our result list is not influenced by how much commission we make based on where the insurer is positioned. So in some ways, I think we at Verivox are very close to how I would build an aggregator if I could choose everything. What I would have done differently, maybe I would have started with insurance in the first place, not with energy. But of course, that's my personal preference.
But you can still catch up, I would say. So you discussed with Nick a couple of now UX components, UX measures. Which one of them do you think has moved or will move the needle most, or a little bit broader, what trend in your particular space is the one that excites you the most?
I think building journeys that are basically continuous, doing continuous testing and learning is something that excites me a lot on the industry. Because I come from a perspective where I am an insurance expert, and of course, I have strong opinions on certain topics, but in many situations, I have learned that my personal view was wrong. If you look at the data, you can't look into the heads of the clients. So I think general thing that we like to say is let the data speak. We have hypotheses, but we see if the data proves our hypotheses. And I think the way we can build these modular journeys today um, is something where we can continuously learn and iterate and make them better. So this general idea of build, measure, learn is something at the corner of how we are approaching the topic of UX. And this is something that excites me.
Before we wrap up, Aljoscha, is there any topic that we haven't discussed but should, any last words for this podcast?
I think that two things I want to say at the end. The first one is I think Verivox really has a right to play in this market. And I think that we are on a very strong progress, or we are making very strong progress when it comes to our growth. But in the end, we will also need the insurer to embark on this growth journey with us. A strong second player in the market will help insurers to also grow their portfolio and to become less dependent on a Check24, which will help, again, clients to have more offering in the markets. This is the first thing I want to say. And the second part I want to say is I really believe that we at Verivox, but also the general online comparison market, helps clients and makes the world for clients better. Why is this? We bring transparency into complex markets. And if you look at this, it means we make sure that customers don't overpay for an insurance that is not well suited for them. And if you just look at the general market, the OCPs, the online comparison portals, have helped significantly to make insurance tariffs much better in terms of coverage. So I think that just the fact that insurance moved to the online channel is something that was very much in the favor of clients because they now have a much more competitive landscape of insurances that they can choose from. And I think this is mostly driven by the online comparison portals like us.
Aljoscha, thank you very much. Ron, anything final to add before we wrap up?
Nothing from my side. No, thanks.
Nothing from my side either. Ron, Aljoscha, thank you so much for your time. Best of luck, and yeah, I'm sure to check out Verivox in 3 months' time and see whether my old dusty insurance policy, how it performs in the marketplace today.
So
Thank you very much.
Thank you both as well.
thank you.
Great to
Bye.
talk to you. Bye.